Alright, so despite seeing a new all-time high in the SPY today, we have a bearish reaction which has appeared just as we are in a clear resistance area. By failing to break through this line around the 609, the SPY is showing some weakness which could turn into a correction next. It is a dangerous signal for the uptrend, but how dangerous is it? Well, in today's video, we'll see what to expect next, always paying attention to the technical evidence to develop our strategies, because everything described in this video is technically based, without bias or personal opinion. This is the Finance Hydra Channel. My name is Nathan. Welcome to another daily study. So let us start our analysis looking at the SPY ETF as usual, because right here we see a crystal clear bearish reaction just below this resistance level. Again, 609, $609. The previous all-time high from December 2024 is now again acting as a resistance area for us. Yes, we did a new record high this morning. However, by making a bearish reaction, closing below the 609, SPY is suggesting some weakness in this resistance level, which is totally understandable. After all, we are near a key resistance point. If the SPY is about to make a bearish reaction, now would be the perfect time to do so. I told you guys this yesterday, right? If we see a top signal right now, that would be perfect. Now, is SPY reversing the bullish sentiment? No, not yet, because as far as I'm aware, we are still above the 21-day EMA and the exponential moving average on the daily chart, by the way, and any pullback to this moving average could be just another harmless correction while we maintain the uptrend. If we miss this moving average, if we lose it in the next few days, then alright, maybe SPY is going to turn more bearish and we could see a sharper correction, possibly to close this gap at 585 or maybe even to retest the 576 next, which was the previous support level after closing this open gap from November 6. Alright, so we still have a few support levels that could hold the price in case a correction occurs, but only if we lose the 21-day EMA, we would see SPY really entering bearish territory again. As far as I know, we are still maintaining the uptrend, and any pullback to this moving average could be just another buying opportunity. This is particularly interesting because when we analyze the weekly chart, we see that SPY is not only maintaining the insanely bullish sentiment, but last week we just made a harmless pullback to this moving average and of course to this purple trend line, which is here connecting the previous support levels on SPY since October 2023, alright? So we are still in a very clear and strong uptrend. All right, and I know we are facing a medium-term resistance level right now, but since the major trend is still bullish, well, again, any pullback, any mid-term pullback, any pullback on the daily chart could be just another buying opportunity. This is what the charts are telling us right here, right now. We got us, because guys, speaking for myself at least, I am the kind of trend tracker trader. Alright, I always like to follow the trend, and if I wanna buy, I like to buy near a support level because the risk reward ratio is always optimized. And if I were to sell, I always like to sell near a resistance level because the risk reward ratio is optimized as well. I mean, let's say hypothetically, of course, let's just say that you wanna sell SPY right here, right now. Okay, you are totally correct in doing so, especially if we lose today's low next week, because if we actually make a top signal over here, if we trigger this bearish reaction next week by losing today's low, well, you may short because your stop loss would be just 1 bar, would be just above yesterday's high, all right, around 6 $610. Your potential reward is the 21-day EMA because that's our next technical support level, right? So yes, you have plenty of downside while your stop loss mitigates any potential reversal if we see this possible top signal getting frustrated in the next few days. All right, so your stop loss is small, your target is huge. Very nice risk reward ratio. That's a technically plausible trade. Therefore, yes, it does make sense. If you are bearish right now, shorting or selling near a resistance level, it does make perfect sense. Of course, not investment advice. It is not a trading recommendation. I'm just telling you guys that when we analyze the situation, at least the medium-term trend over here, we see the possibility of a downside. However, you shouldn't count that this trend is going to reverse, at least not yet, because again, on the weekly chart, we are still very bullish. And again, speaking by myself, I do not like to short in this circumstance because we are still in a long-term uptrend, all right? Instead, I like to sell, to liquidate any open position that I have on any stock, all right? I like to take my profits, to book my profits, and then wait for the next buying opportunity. But I don't like to necessarily short in this situation, okay? That's how I like to proceed in this scenario. Regarding the QQQ, we see another bearish reaction. In this case, the situation is a little bit more complicated because on the 1 hour chart, we see a kind of double top chart pattern, right? And we have the trigger point of this double top around $528, which is precisely where the QQQ is finding a support level right here, right now, on the 1 hour chart at this exact moment. Therefore, if we see the QQQ actually losing this support level, it will trigger this double top chart pattern, suggesting a short-term reversal, which means a medium-term pullback. A pullback, again, any pullback to the 21-day EMA could be just another harmless pullback in this long-term uptrend, because on the weekly chart we are still very bullish, above the 21 weekly moving average, above the $500 support level, the previous resistance level from July last year, right? So we are still maintaining the uptrend very nicely, but this doesn't discard the possibility of a medium-term pullback to the 21-day EMA if we see the QQQ losing the 528 trigger point, the trigger point of this double top chart pattern. So let's pay attention to the 528 for the next few days. Now, how this is going to affect our stocks? Because I told you guys we have a long position, an active position on Nvidia. We bought Nvidia down here near this support level. Again, always buy near support levels, sell near resistance levels. We got very, very close to my personal target, $149. That was my specific target, and today's high was 148.97. We almost hit our technical target over here, and right now we see a quite ugly bearish reaction. So you may ask, Nathan, how do you like to proceed in situations like these? Well, like this. Well, I like to sell, okay? Let's just sell, and this is what I recommend to the members of our educational project, the 5% project. You can book your profits, all right? Because we bought near the support level, so we did a very nice trade, okay? So it is a sell, at least a partial sell, and then we'll see how Nvidia will react if it does reach its next support levels like the 21-day EMA or maybe even lower levels, because if we see the indices, if we see the SPY, the QQQ, if we see they all triggering their top signals, we could see a sharper correction on Nvidia as well, all right? So the situation will be quite problematic. So I rather be safe than sorry in situations like this, and I like to book my profits when we see a technical sell signal. All right, I don't like to book profits when we see just one single insanely bullish candle, right? Because this makes people a little euphoric and nervous when we see the market very bullish, all right? When we bought and the market is extremely bullish, people will get nervous because they're afraid of losing their gains, right? This always happens, guys. This doesn't exist here in this channel because we always work with technical evidence, all right? This completely detaches us from our emotions, okay? We can trade stress-free in this market, always following, always analyzing what we see right here, right now, and react properly to the moment, okay? This is how we like to proceed. So if you ask me, okay, Nvidia is making a top signal, it is losing yesterday's low, all right? So that's a quite problematic bearish reaction because unlike SPY, unlike the QQQ, we are not losing, on the indices at least, we are not losing yesterday's low yet, but Nvidia is. So Nvidia is more bearish than the indices right now. And if we see a top signal on SPY and the QQQ next week, that could get very ugly over here on Nvidia. So yes, I recommend booking profits. And guys, if you want to trade with us, join our educational project, the 5% project. There our members get access to my exclusive trading signals and strategies on SPY, QQQ, Nvidia, Tesla, AMD, Palantir, many other stocks. And most of the time, these stocks are outside of everybody else's radars, all right? So just take a look at our website for more information. It is absolutely free to try. You can try our service for free because here our philosophy is to show you guys how valuable our service is first, and then you decide if you really want to stay with us or not. No strings attached. You can cancel anytime, all right? So just take a look at our educational project. Become a member of the 5% project. The link is in this video's description, all right? And Tesla is right now on the verge of reversing because we see first on the 1 hour chart, we see a head and shoulders chart pattern. Nathan, what's a head and shoulders chart pattern? It is nothing more, nothing less than a bullish pivot point followed by a bearish pivot point. And this is why a head and shoulders is such a reliable bearish reversal chart structure, all right? Because we see the frustration of the uptrend just after the materialization of a bullish pivot point, and that's quite frustrating for the bulls. We see right now the possibility of a head and shoulders. This pattern wasn't triggered yet, all right? We gotta see a real breakout of this neckline, which could be around the 509 or maybe around the 506 down here, all right? Only by triggering this head and shoulders, we could see an actual bearish reversal chart structure on the daily chart. I'm so sorry, on the 1 hour chart, suggesting a sharper correction on the daily chart, because on the daily chart we are going to miss the 21-day EMA, the exponential moving average on the daily chart, which is totally flat right now. And Tesla just made a false breakout of the 426 resistance level over here. So that would be a very problematic situation for Tesla if we see this head and shoulders getting triggered, all right? And again, it wasn't triggered yet. Maybe it never will, but so far we are dangerously close to our major support levels, to our major inflection points, short and medium term wise. Therefore, we gotta pay extra attention on the 406, around the 21-day EMA on the daily chart over here, because by missing these key points, Tesla could easily trigger a sharper correction back to the $358, and the fact that it is going to report earnings in 5 days only makes the situation even worse, all right? So right now, we gotta be extremely careful. It is my personal suggestion to you guys, as swing trader, to not hold any stock during earnings. And this is one of the reasons why we see less opportunities while we are in earnings season, okay? Because for swing trading purposes, it is totally not advisable. Advisable, I don't know if this word exists. You can correct me anytime you want in the comment area, all right? Because English is not my first language, but I don't advise holding any stock for swing trading purposes during earnings. We don't know how it is going to behave next. We can't possibly predict the future. And guys, again, technical analysis is not about predicting the future. It's about reacting properly to what we see, building strategies that favors us, that gives us an edge in this market, always knowing that we could be wrong, but that's okay, because TA also helps us in designing the perfect risk management for us. Okay, so this is how we behave. This is how we proceed here in this channel. This is why you should subscribe to this channel, by the way, because here we only talk about technical evidence. No bias, no guesswork, no trying to predict the future. Right here, we only work with evidence. We will only work with a crystal clear strategy that guides us in this market, knowing that no one can possibly predict the future, but we can control our strategies, because we can't control the market, but we can control ourselves, we can control our strategies. We gotta proceed very, very carefully, all right? And guys, this is one of the reasons why I always tell you guys to work with strategy. Some people are so confident, they are so confident that seriously makes these guys look quite naive, all right? We can't possibly know what's going to happen next. So when you see someone saying, oh, it is going to buy, I'm so sorry, it is going to rise, it is going to fall, we're gonna see the next collapse next, I knew this was going to drop, I knew this was going to explode. Guys, no one can possibly tell, okay? No one can possibly tell. If you see these guys, just run, all right? Because here we only work with technical evidence, like true professionals, okay? This is how professionals work in this crazy weird market, because we can't possibly control it, but we can use our strategy to design the perfect risk management to us, okay? And again, if you do need help with our strategy, join the 5% project. The link is in this video's description. There I teach you guys everything about my personal trading methodology. I wrote an exclusive ebook on technical analysis, which is there, free. It is totally free to download. Just join the 5% project. No strings attached. The link is in this video's description. You have 7 days just to try out our service, and then you see if you like it or not. Since we have an amazing track record, most people actually end up staying with us, but it is totally up to you, all right? Now, regarding AMD, guys, AMD is extremely bearish. We see AMD going down. It is not recovering. Once again, today it failed in breaking the 21-day EMA, which is clearly acting as a resistance level to us right here, right now, and we see another bearish reaction. It is going to report earnings in 11 days, so we gotta be careful, but by materializing a top signal below the 21-day EMA, it is going to frustrate the idea of a reversal on the daily chart, and possibly the idea of a reversal on the weekly chart as well, because on the weekly chart we saw last week a very nice bullish reaction, but right now this week we are not reacting properly. So AMD right now at this moment is not making a serious meaningful bullish reaction yet. If you ask me, AMD needs to break and close above on the daily chart, close above the 125, because maybe we're gonna see a very clear bullish pivot point on the 1-hour chart, finally above the 21-day EMA, right? That would be a very good signal, but right now it feels like we have a double top chart pattern over here as well. So it is not reacting properly. We have yet to break the 125 area. We have yet to truly break the 21-day EMA. So as long as we stay below these two resistance levels, AMD is not going to recover properly. It is not going to be a buy, not investment advice, but guys, it is quite difficult to analyze, to understand, to see a possible meaningful bullish reaction on AMD right here, right now. I know many of you guys love AMD, but I can't say that AMD is phenomenal right now, okay? Because it is not. It is still in a crystal clear bearish territory. No single meaningful bullish reaction. And regarding Palantir, again, I have some bad news for the bulls. We see a possible top signal in this area. This candlestick pattern has a name. It is a gravestone doji so far, okay? Because we still could see a bullish reaction by the end of the day, but still, it is a gravestone doji or maybe even a shooting star candlestick pattern. It doesn't matter, all right? Because all these patterns, they are all bearish, suggesting a possible correction. Guys, do you remember what I told you guys yesterday on Palantir? If we see a top signal, and if we see this top signal getting triggered, and if we see an actual correction, maybe to the 21-day EMA, maybe to the $71 again, that could be just another buying opportunity. Well, that's how I still see Palantir, because if we see a real correction over here, that's totally fine. We have two major support levels, the 21-day EMA and the $71 to hold the price. Any possibility of a bottom signal in this area could be just another buying opportunity, because again, you are going to buy following the uptrend near a support level with a good risk-reward ratio. If you're wrong, you're not gonna lose that much. If you're right, we have plenty of upside all the way up to the $84.80, okay? Because that's going to be our next technical target on Palantir. Therefore, it is looking promising, okay? Palantir is one of the stocks that I have on my personal radar. If I see any meaningful buying opportunity, I will promptly share with the members of our educational project, of the 5% project. But guys, right now, it is a wait. Yes, we see a top signal, but remember, this top signal wasn't even triggered yet. Maybe it never will. If we see next week Palantir losing today's low again, all right, then we know we have a possible correction going on in play. But so far, we are just trying to make a top signal, okay? That's it. Let's remain skeptical, because we gotta be skeptical all the time, because we only work with a crystal clear trading methodology, with a crystal clear technical evidence. So right here, right now, yes, we see a possibility of a top signal, but we'll see. Let's wait for more confirmation next week. And regarding IWM, it's been a while since I don't analyze IWM. Guys, this one, as far as I know, is making a sideways correction. We at the 5% project, we bought down here, near this support level, and it did hit our target. We already sold it around the 227, which was a previous resistance level, okay? Resistance level here in October, resistance level here again in January, and right now it is acting as a support level for us, just like it did over here in November 19, when, by the way, we also bought IWM with a target around 242, by the way. So we did two fantastic trades on IWM, just buying near support levels. Right now, we are above our previous target. We are above our previous resistance level. Fantastic. That's very good. Now, if you ask me, we don't see any crystal clear, meaningful buying opportunity on IWM, but I do understand that we are now in bearish territory. I'm so sorry, not bearish, bullish territory, because we broke the previous resistance level, and we are right now above the 21-day EMA, which is pointing upwards, by the way. Therefore, we are clearly in bullish territory. If we break the previous resistance level at $229, we are going to trigger another bullish continuation chart structure. In this case, we could rise all the way up to the 240s or maybe even to the 244 again, all right? And that's it. But even in this scenario, it is quite difficult to buy IWM right now because the risk reward ratio is not that clear to me. I see better opportunities elsewhere. Regarding Broadcom, it is making another top signal near a resistance area because this entire area is a resistance level near the 247, right? Right now, today, we see a shooting star candlestick pattern. By materializing a top signal, Broadcom is going to possibly trigger a sharper correction to its next technical support level, which is the 21-day EMA. On the bright side, this moving average is not that far away from the price right now, so any correction to this key point could be just a harmless, small, quick correction, right? But if we lose the moving average, okay, then we are gonna re-enter bearish territory and we could trigger a sharper correction to the $211, this black line down here, okay? So we gotta be careful with this moving average in the next few days if we actually materialize this top signal, just like on Palantir, we see a kind of shooting star, gravestone doji candlestick pattern. Either way, they're all bearish reactions. So let's see if they will trigger their top signals or not. Guys, again, guys, I have to tell you guys this because some people will accuse me of being bearish or negative in this market. Guys, I'm not necessarily negative in this market, but I do understand that we are still in a long-term uptrend. So when we see a possibility of a bearish reaction, we should see this as a possible buying opportunity near a support level. Okay, that's all that I'm saying. I don't wish we're gonna see a collapse next. I don't wish we're gonna turn bearish. I don't wish anything, all right? I don't care about anything. All that I care is about technical evidence, and I always like to hunt for new opportunities in this market. This is why every single day I scan more than 100 stocks every single day just searching for the next meaningful opportunities with good risk reward ratio. All right, this is how we proceed here in this channel, and this is how I like to do with the members of our educational project, the 5% project. All right, very simple situation, and this is how I see for Sofi, because Sofi, this is what I see for Sofi, because as far as I know, Sofi is also trying to make a top signal just like it did over here, okay, on January 2022. However, this top signal wasn't triggered, okay? It simply wasn't triggered. Right now, we see another top signal, okay? It wasn't triggered yet. Maybe it never will. But if we do trigger it, okay, maybe we're gonna see a pullback. It is going to report earnings in 3 days, so we gotta be careful over here. But if we see a top signal, maybe Sofi is going to also lose the 17.19 support level, the previous resistance level over here, and we could see a pullback to the moving average again, or maybe even to lower levels, depending on how it is going to react after earnings next week. Of course, I'm gonna keep you guys updated in this channel. So again, if you're still watching this video for nearly half an hour, my dear friend, you are crazy. You should subscribe this channel because you do like studying the market, analyzing the market. You do like dense information, because here in our videos, every single stock we analyze it very thoroughly, right? Always paying attention to the details, always analyzing the technical evidence so carefully, because guys, this is what we do here, okay, every single day. So again, if you're still not a subscriber, dude, you're crazy. You should subscribe, all right? This channel is for you. Join the Finance Hydra Channel and click the like button as well, because your like means a lot. It truly means a lot to help our small and humble community to grow more and more and more, and that we can reach more people as well with our philosophy of not spreading the panic, spreading euphoria, right? We always analyze the market so calmly, always paying attention to the technical evidence, analyzing the next opportunities next. So if you do like this channel, subscribe, click the like button. Thank you so much for your audience. I wish a great weekend to you all. Stay safe. See you guys next week.